Hello out there. Hello out there.
All right. Hello, everybody. Mortgage Marty here, and we're meeting up with everybody. Talk about some more mortgage stuff. Who wants to talk about mortgage? If you're joining this chat right now, you are going to get downloaded with some mortgage tips and tricks from two pretty clever mortgage professionals here.
Very clever. Very clever. Who you kidding?
So
Very
again, my
clever.
name is Mortgage Marty, and I'm with Nexa Lending,
My name's
and I got my buddy here.
my name's Bo Rogers. I'm known as the Money Man, and I am also a mortgage lender. I'm new to TikTok, but not new to mortgage. I've been in mortgage since 2009 and started back in the countrywide days, but not new to mortgage. I've been in mortgage since 2009 and started back in the countrywide days.
Hey, okay, we're not frozen anymore. I don't know if we got frozen or not, but so again, we come on here daily, and if you catch us on a Monday, we're going to talk about some market Mondays and how the market turned on over the weekend. If you tune in on a Tuesday, we'll talk about Tactical Tuesday and really the difference between an FHA loan or a conventional loan, VA loan. Today's Wednesday, so we're going to talk about Wealth Wednesday. Talk about how you can build some of that generational wealth, uh, leveraging, maybe you already own a home, getting some money out of your property to get that investment loan. Um, but how's that sound? Do you have some tips on how to build some wealth?
So, I think we're going to probably end up talking about home equity lines of credits and equity lines, which is all cool in the game because I have a HELOC on my house. Um, I got a HELOC on my house because I had to pay my ex wife $72,000 and it depleted my savings account. And I opened up the line just in case there was anything that I ever wanted to buy. And it's cheap money. It's a lot cheaper than credit card. So everybody that has equity in their house should have an equity line of credit open, and you have to open it before you need it. I have people call me. They're like, "Hey, I'm losing my job. Can you help me out?" And it's like, well, you have to qualify for it when you can qualify for it. So it does follow some of the same guidelines as a regular loan, to where you have to show the ability to repay a loan, just like any other loan, right? So do it before you need it, but definitely have a home equity line of credit open. One of the misconceptions about a home equity line is, they're like, oh, the interest rate, you're going to be paying on it. You don't actually pay on a home equity line until you actually use it. So that's the beauty of it. I've never paid a penny of interest on mine because I've never had to use it.
So a pretty sweet formula. It's real easy to figure out how much your max allowance balance is. So whatever the value, or actually the price of the home, you want to multiply that by 80%. Okay. So you have that amount. Then you want to subtract how much you owe on the house. That is going to be your maximum allowance
On a home
that
equity
you could
line.
get,
Correct.
right? So actually, let me pull up my little calculator here. So let's just say you have a $400,000 house,
Okay.
and you multiply that by 80%.
Okay.
So the max that you could, if you owed nothing on it, would be $320. But you're still paying on it, right?
Did you say $320 or $320,000?
$320,000.
Oh, thousand.
You got to add a
Okay.
K to that. You got to add a K.
Yeah.
So 320,000, but you still owe some money on it. So let's say
Maybe.
you still owe $150,000 on the house. You're going to take that 320,000, subtract 150,000. So that's $170,000 that is eligible to pull out of your equity.
Yeah.
And like Bo was saying, it's kind of like a credit card, right? You're going to use what you need. So you can use that to pay for down payments and closing costs on a new investment property.
True.
I have clients who have done that Actually, I got a recent client. He's doing that to purchase a fix and flip home. He's needing around 50,000 to get that deal going and off the ground. So he took a HELOC out, and of course it's more than what he needed, and he has that, and he's going to be able to use that to get his investment property, and it's a pretty good deal. So that's just one example of how you can use your HELOC money. You can use it to pay down high interest credit cards. Maybe you have a kid going to college, you need some college expenses, or maybe you're just needing to do some repairs on your own house that you wanted to do. Whatever it is, it's basically your money. You can do it however you need. Maybe you do find yourself in a bind and you're needing to pay something off.
Yeah.
So just one of the many different ways that we can help you out if you already own your home and you have some equity built into it, right? So you got to have at least 20% down. I mean, at least 20% equity into your home. But it's pretty easy. It's pretty easy. And the process does not take long at all. You can get your money within 5 to 7 business days. It's pretty fast transaction.
Actually, in the state of Texas, it's 12 business days.
12 business days. State of
Yeah,
Texas.
any equity product is 12 business days in the state of Texas, because you have to sign the waiver for 12-day Texas rule. Anything equity in Texas, 12 days.
So again, the reason why we're coming on every day on TikTok is to gain some new clients. We want to help clients demystify the mortgage process, right? It can be a little scary out there, but that's what we're here for. We're here to make it easy. We're here to take that stress off of your shoulders, and we're going to take care of all that, right? So whenever you have that conversation, it's pretty easy. All we're going to talk about is your CIA. We're going to talk about your credit, your income, and your assets. That's it. And if those 3 boxes get checked off, chances are we're going to be able to help you out in some way or another. So how do you get that going? You can call me at 214-399-8007. You can email me at mvelasquez@nexuslending.com. You can message me on TikTok, on Instagram, on Facebook. You can find me under Mortgage Marty.
Mortgage Marty.
Martin Velasquez is my government name.
Yeah, AKA Mortgage Marty.
But that's what we're here for. So we're looking to get some new clients. We want to just answer your questions. There's no obligation for talking to us that you have to use this. I just genuinely love helping people answer the questions that they have about their home. Yeah. Just recently too, I had an old friend reach out, and he was wanting to downsize on his home, and he just didn't know where to start. He was in his home for about 4 years, and he was like, "Hey, what do I have to do? Can I do this now?" Long story short, right? So he was end up on a 6 to 8 month plan based on his situation, and it was just a conversation, right? We jumped on a Zoom call. He told me where he was at on his credit, income, and assets, and we put him on a plan, and he's actually taken some of those actions now. And when he's ready, we're gonna fill out that application. We're gonna get him a pre-approval letter. He's gonna go home shopping, and it only takes about 30 days once you're under contract, and you found your or less. Yeah, a lot of times it's less.
Yeah.
Don't get me wrong. we pride ourselves on doing it less than 30 days. But again, that's how those calls go. If you're ready for an application now, heck, just go to my page and fill out that application. I get an email as soon as you're done, and we can move from there.
What page do you go to?
What page do I?
Yeah. What page do you go to fill out an application?
You can go to my Facebook page. I got my links all on there. I got my links in pretty much every bio on there. Again, Facebook, Instagram, TikTok. We have this really cool new AI system that you can use. If you're ready for that. If you're not ready for that, we could do it a traditional way.
Right.
But they're getting a lot smarter now, these AI systems. they'll collect all your documents. You can ask it questions, and it tells you you need this, you need that, and the approval process is pretty fast because it's looking at all your documents, something that normally we would have to do manually. We're still in the background, monitoring and stuff. It's not just solo the AI system, so you still have your trusted mortgage professional looking at it. But again, it's just another extra tool that's out there that we have. But it's easy. It's easy. It's not as difficult and complex as people think. You just have to know where you stand so you know what your next step is. If you're just sitting at home thinking, and maybe searching some things online, it's not giving you the full picture, right? You need a mortgage professional to help you guide you along the way. And so that's something, again, that I love doing, just showing families their pathway to their dream home. Maybe you're on a plan that's right now. Maybe you're on a 3-month plan. Maybe you're on a 6-month plan, a 12-month plan. Let's figure out where you stand, answer those questions, and get you going.
Yeah, 100%. Super easy, super simple. Yeah, take advantage of it. It's free. It costs you nothing to get started.
And
Easy.
so another cool thing that I like, when you work with someone from Nexa, you're not only working with just that one mortgage loan officer, right? We have a great support team behind us. If there's a real difficult situation or question that comes up, I bounce a lot of ideas off my partner Bo here. We have a team. We're actually right now at where are we at? Canyon Creek
Country
Club. We come here once a week, and we strategize, right? We have a nice little lunch together. We talk about clients that we're helping out. We talk about strategies to reach out to realtors, to clients. So it's not just one person, one mind that you're dealing with, right? So we have a whole network behind us to help you out, right? Because we're on your side. We want you to get the best deal. We want you to get a mortgage payment that you're comfortable with, that's not going to throw your budget out of whack. And we're going to get you in the best program, right? So we have like over 300 lenders, which is crazy. Who I don't even know all the 300 lenders, but we have a few of our favorite ones. But even I learned just about a new one just last week, Creedberg, and that lender's actually helping us out with a fix and flip loan, and they had the best rates at that time. So again, that's one of the benefit of dealing with mortgage loan officer from Nexa is you're tapping into the entire Nexa ecosystem, and we're all here to help you out. So yes, please reach out. We want to help you out. We want to answer those questions. We want you to be on the right pathway to get your dream home. So here's some other tactics that I like to talk about when it talks about building wealth. Give me a sec here. Let me pull it up here. There it is. So what if you're like, well, I can't afford a $3,000 mortgage, right? So here's a little housing hack. The housing hack is buying a property and living in a portion of it and renting out the rest to offset your mortgage. You can buy a 2 to 3, a 4-unit multi-family property as your primary residence with as little as like 5% down, right?
Right.
Or if multifamily is too expensive in your market, you could do a single family house and rent out a room to help you out with that mortgage payment. They could be in a accessory dwelling unit, sometimes called the mother-in-law suite, or you could just rent out a room or a basement to help you out with that cost. So if your 6.5% mortgage is around $3,200 per month, but you rent out the other half for $1,800, right? So your out-of-pocket housing cost is only about $1,400. So you're building equity, you're building that generational wealth on a massive asset for less than the cost of a one-bedroom apartment.
Yeah.
So just another hack. Maybe that situation is right for you. We see a lot of young people doing this actually. You could buy like kids going to school. Sometimes their parents will help them out with gift funds. You can buy a house, right? A lot of the houses near a lot of colleges are big old giant houses, you know, 3-4 bedroom house, and it's all under the kid's name. But then they're renting out the other 3 to their classmates, and oh my gosh, that's like they'd probably pay the whole mortgage, to be honest, if you're renting out 3 rooms and you're living in one room. Have you heard of people doing that before?
Yeah. So when I bought my first house, I rented out 2 rooms. I made them sign a contract. My total house was, I think the loan amount was just for $124,500 back in '03, and I had 2 college buddies rent out rooms for $100 a piece, and so the total cost to live in the house that cost $1,130 a month was $330 a month to live in my house. And then, of course, when I sold that house, I had all the equity was all mine. You know, the renters didn't get anything out of it. They did get a cheap place to stay, and we did split the bills in thirds too. But then people will sometimes ask, like, can you use that money as income? I think the border rule states that you have to have it, I want to say, I think it's 12 months to be able to use it as income. So make sure to save that contract and save the rental history in case you do want to use that money for income down the line. Make sure you're reporting it to the government.
Yeah, if you're not reporting it, unfortunately, you can't use it at
Right.
all. But there's different ways that can help you out in the future.
Right.
But yeah, so again, the whole point is building your generational wealth, right? You don't want to be a renter, a long-term renter, because you're just paying the apartment complex. If you're just renting a house, you're just paying the landlord. They're getting all those benefits. And if you're there 2 or 3 years paying, you know, $2,000 a month, that's $2,000 a month that could have been going to you.
Yeah.
It's paying off their mortgage. You want to be in a position to where
somebody's paying off your mortgage.
Yes, that's the best piece. That's the best piece. So buying real estate is definitely a good long-term investment. You hear people saying, "Oh, now is not the right time to buy." It as long as it fits your monthly budget,
Yeah.
it's the right time to buy.
And don't try to judge the market. It's just like investments, you know, where, you know, your financial planner says, hey, none of us are smart enough to follow the market and get in exactly at the right time. The right time is now, just like Marty's saying, the right time is now. Yeah. Before it goes up even more.
Yeah, so again, my name is Martin Velasquez, also known as Mortgage Marty, and you can reach out to me at any time. You can call, text, or do a Zoom call, right? 214-399-8007. Or you can email me at mvelasquez@nexalending.com. You can DM me on any of the platforms, right? I'm on there, YouTube, TikTok, Instagram, Facebook, and we're just there to help you out. If you're ready to fill out the application now, great, more power to you. If you don't know if you're ready now, let's talk. Maybe you are. It's real easy. We're just going to talk about three simple things: your credit, your income, and your assets. That's it.
Yeah.
Your credit is going to talk about your score, right? We could do a soft check. You know, there's free credit sites on there, and that's going to tell us which direction to go based on your credit. Maybe you go FHA, maybe you go conventional. you qualify for this program, you don't qualify, or maybe it's too low and we have to figure out, okay, how can we increase your score to get up to 680? Your income, right? That's your monthly before taxes and 401k and all that stuff gets out. That's going to determine how much home you can afford. So maybe you think, oh, I want to be in a $500,000 house. Well, let's look at your income and let's see exactly how much you qualify for. Then you can start shopping for the right home in the right neighborhood at the right price. A lot of people think you need like to make $200,000 a year. You don't. You don't. In Texas, I'm sorry, in Dallas, the median household is around 365,000. But in your surrounding cities, your Forney areas, maybe a little bit farther north, um, down,
Denison, Sherman,
yep, or down south in Duncanville,
Soto.
DeSoto, Cedar Hill. You can find really, really beautiful homes in the 250 range. They're out there.
True.
For as little as $60,000 per year, we could qualify you most likely for a $220,000 house. Approximately, that's going to be around $1,900 per month. Again, those are just some really, really rough numbers. But that's all you need. Say you make $70,000, we could probably qualify you for a $250,000 house.
Wow.
If you're making 80 grand a year,
Oh,
you could get into a $285,000 house.
now you're talking.
If you're making $90 per year, or $90K per year, you're looking at around a $325,000 house. So it's there. You don't need to make $150,000, $200,000 per year. You can get qualified. There are beautiful homes out there in the 250 range.
True.
Right? There's townhomes, there's duplexes and stuff. They're very, very affordable and beautiful. So you're not being outpriced. But that's why we look at that income. We're gonna see how much home you can afford and your monthly payment that's not gonna blow up your budget, that you're comfortable paying for. And then we're gonna look at your assets, right? So again, we're gonna look at your credit, income, and assets. Your assets is just how much money have you saved up. Your 401k, maybe you have some stocks and bonds, maybe you have even like life insurance, like how much assets are there. We mentioned earlier, you can also get a gift from a family member. I know a lot of parents who have saved up just to help their kids get that first home. You can use that to help pay for closing and down payments.
Yeah, and there's several. So also in addition to that, like I've been doing a whole lot of T-Shack loan, which that's basically going FHA, so 3.5% down, and then through T-Shack you can ask for up to 5%. The interest rates are a little bit higher than a normal FHA loan, but remember you are getting 5% to help for the down payment and escrows. On top of that, what we did is we asked for 2% seller concessions. And I think 7% is probably the magical number to get somebody into a house after closing costs, down payment, and escrows. So that customer will be getting in a house, I think it says like for 230 something dollars, and it is a $300,000 house. It does have a few restrictions. You can only make up to 143,000 a year household income in Denton, Texas, to be able to do that in Denton County. That's where my client is purchasing. But we are going to get him into a house with only $232 of cash out of his own pocket. How crazy is that? That's
Yep.
on a home sweet home program, and it looks like it's a 30-day close, so it's perfect. So there are some ways for zero money down to get people into a house if you have reasonable credit and reasonable income. Yeah, and if you like that, I need you to follow, like, and subscribe right about now by subscribing. Every time Marty comes on, you'll get that notification and see what we're talking about. It was good stuff. Give us thumbs up. If you don't like it, thumbs down it. We can take rejection. With a face like this, I've been rejected a lot. So it is what it is. So yeah, so there are other programs, and like we were talking today, like I was amazed at some of the programs that I've never even heard of. Like I'm really surprised at the doctor program that we're able to offer. I know we're kind of switching from like maybe somebody who is normal income to a doctor's income, but let's do it. Just go with me. So the doctor's program I thought was super cool because it's not only for medical doctors, it's also for psychiatrists. Who would have thought? Shrinks, yeah, this may be for you if you're a shrink. Or it's also for veterinarians and also for dentists. So it's not just medical doctors. If you're a dentist, you qualify. Or if you're I was gonna look up chiropractor. I want to find out if that's on there because that may be a gold mine, especially with what is it, chiropractor right there off Walnut Hill over there. You know what I'm talking about?
Yeah, yeah. I seen that.
Oh my
It's a whole
God, what's it called?
chiropractor school.
It's a big school.
It's Parker University.
Parker Chiropractic, right?
Parker University.
So I'm going to check to see if chiropractors qualify, but I mean, basically, is zeroed down on this doctor's program. So dentist, veterinarian, it does have what nurses, like certain nurses.
Yeah,
A
RNA, so a
RNA
registered
qualifies.
nurse anesthesiologist,
So
and a practicing, a nurse practitioner. Sorry, nurse
nurse
practitioner.
practitioner. And I
Yeah.
think there's a lot of nurse practitioners out there that probably rent. So this would be
And so
perfect
this
for
program's
them.
really geared for your first time, you know, in that profession, right?
Right.
You have the income, but maybe you don't have all the money saved
Or
up.
maybe you have a lot of student loans that's killing your debt to income ratio.
So this program allows for 0% down for those professions,
Yeah.
and it doesn't really count your student loans and stuff.
Yeah.
It gives it some sort of break where you can qualify.
Right. So that's a good program. There's a ton of good programs out there. We're going to kind of go through programs as we progress in our TikTok live videos. But if you have questions, like Marty said, just DM Marty or call or text. We do loans, and we can broker loans outside of the state of Texas. So 48 different states is where Nexa is able to originate. So if you're in New York, it's a no. Is Massachusetts, isn't that also a no at this point? And then I think it's those two, right?
Just a few, yeah.
Yeah. So there's only a few places that we are not able to get a loan open for you, but we know for sure in Texas, if you're in Texas, hit us up now. Get it while it's hot, and it is hot.
It's a little bit hot. We're sitting outside right there. You can
I'm
kind of
hot.
see our
I'm
shade
dying.
going. We're under a tree. We have the pool picture in the background. We're actually not at this cabin, but you probably already knew that.
Who's this person? Who's this person? Like, hi.
I thought you sold her that house.
I think that is the house I sold her. I think that was an investment property up in Oklahoma.
Look at that.
Yeah, that was an investment property in Oklahoma. It was a good deal.
There's
Yeah,
a lot of people buying
she
Broken
rents
Bow
that out.
cabins.
Yeah, it's Broken Bow is where this one is. Yeah.
Yeah, if you're in Dallas and you visited Broken Bow, you know how beautiful those cabins are there. Again, we're talking about building your wealth here on Wednesday. That's an excellent those are excellent properties to help generate wealth, right? Whether it's a short-term rental property like an Airbnb up there or a long-term rental property, we can help you figure out your plan where you could buy a Broken Bow cabin in Oklahoma.
True
It
that.
happens. It happens. That's how they're doing it, guys. That's how they're doing it. They're using their equity and their current home, and they're just building it. They're building their own wealth. It's a great way to build your generational wealth,
True.
and we can help you out with that. We can help you out with that. So that's why we just want you to reach out, have that discovery call. again, there's no obligations when you talk to us. We just like talking, helping out folks, getting them on their plan. Because again, it can be kind of scary out there. You know, you think mortgages and the whole process is in a little black box. No, we want that black box to be as transparent as possible, right?
Yes.
We know all the insides and outs. We're going to take that stress off of you and be there with you every step of the way until you cross that finish line and get your dream home, whether it's your first home, your second home, an investment property, or maybe you want to get into building properties, right? Not only do we do residential loans, we also do commercial loans. So it could be ground up, it could be your fix and flip. Heck, if you want to go out and buy a commercial building, we can also help you out with that too. So that's one thing again that I like about Nexa. Again, just talking up Nexa a little bit. We just have a vast array of products and loan options for you out there. Whereas if you go to just your local bank or credit union, right, they have their one program.
One
and
program.
You better qualify for it, or there's not anything they can do for you.
SOL.
So I kind of think of it how pretty much everyone's bought a car before, right? You go into a dealer, you talk to their salesperson, right? They show you the numbers. Okay, if we can get you into this car for $400 a month, you want to do it? And you're like, oh, wow, $400 a month. And then they go back to their hidden room, leave you out there sweating it out. They come back, be like, oh, yeah, we can do this $400 a month, and it's 20% down, or it's 20% interest, right? That's their in-house lender. That's kind of the way that works or whatever. But luckily we have a lot more options for you.
True.
And we're not going to pitch the high interest rate first. We're going to pitch your best deal. We're going to pitch the best deal, the best rate that fits your situation. Again, it's your mortgage payment, what you're comfortable paying per month, something that's not going to blow up your budget. Say a $2,800 per month is kind of your budget. How much home can I afford for $2,800 a month? You could probably get, most likely, a $325,000 house. Say you want to do $2,500 per month. That's going to be around a $285,000 house. $2,100 per month is going to get you around $250,000, and $1,900 a month you're looking at around the $220,000 range. So again, there's affordable monthly mortgages out there that get you a beautiful home.
True that.
And that's what we want to do. That's what we're here for. Just having a conversation, talking about your credit, income, and assets. And seeing where you stand. Maybe you're ready now. Maybe you're on a 3-month plan. Maybe you're on a 6-month plan. That's why you got to reach out, right? I can't read your mind from here.
Yeah, let's do it.
Let's talk. Reach out.
Man,
to
I'm
us.
dying. I'm getting out of here.
Yes, we're going to be wrapping this up now. And again, just tune in every day. We're just going to be talking about some mortgage stuff. Thursday, we're going to... what are we going to talk about tomorrow? Let me just pull that up real quick. Get my little cheat sheet here. Yeah, so on Thursday, we're going to talk about Therapy Thursday, and we're going to talk about some myth-busting mortgage things out there that you kind of see online. And then if you join us on Friday, we're going to talk about first-time home buyer Fridays, and just talk about the anxieties that first-time home buyers have. So tune in to us next time. Again, if you found this information helpful, tell your friends and family about it. Reach out to me, 214-399-8007. Call, text, email mvelasquez@nexalending.com, and we're here to help. And I want to help you achieve that goal of home ownership. So again, thanks everybody, and we'll catch you next time.